This conference will now be recorded.
All right, welcome everyone. I have the distinct pleasure of welcoming Mark Denejan once again to our video series here. And what we're going to spend a little bit of time on today is looking at a specific sort of high growth theme that we like. And today we're going to look at 5G. So we're going to walk you through some slides. Mark is going to give us his input. Mark, how are you doing?
Great. It's good to join everyone, and we're really excited about presenting one of our 20 top growth themes that are part of the ETF Edge portfolio. And so you'll be seeing many more of these coming out over the next couple of months.
Yeah. That's
Um,
perfect. And so maybe just to recap, like kind of give people sort of an overview, what is it generally that we see here in terms of, the sort of the crossroads we've arrived at between, all these different growth themes combining at the same or coming together at the same time and and space, and and how we think it's so important that one actually allocates part of capital to something like this so as not to have an underperforming portfolio over time.
right. What we're really concentrated on within the ETF Edge portfolio is looking at very long-term essentially tech that across different areas that play well into this long-term growth theme in a combined way. So when we're thinking of something like 5G, it's only one of the main pillars of what we think will take hold and play a large part in exponentially growing the technology curve for the next 10 to 15 years.
Yep.
Sorry, go ahead.
No, that's great. I was just going to say, I mean, I think 5G is probably one of those themes that a lot of people have heard about. So what is it specifically uh, that you think makes 5G such an important part of all of this, all these or not all of them, but a lot of these growth themes, because it really is kind of at the center point of a lot of the stuff.
Right. Well, as everyone knows, we're addicted to our phones, and that's not going away anytime soon. So what everyone's familiar with to date is really the LTE or what's better known as 4G current capabilities of phones, and the next generation of that is 5G. And what that simply means is that we're going to have much higher capacity to download on our phones, and it's also going to considerably drop the latency of that of those downloads. So it widens up a whole spectrum of new applications that are perhaps more data intensive, that require higher download speeds and lower latencies, and it's just going to allow us to do a lot more.
Well, one of the
So
prominent
unfortunately,
examples is in the autonomous car sort of driving stuff, to use a
right.
technical term, where you really can't have any latency, or you have to have very low latency because of the instantaneous threats you have with, on the road. But
Yeah.
also just think about, like, in here, I'm still connected to the Wi-Fi. But with 5G, I mean, I'm already with 4G. Like, I don't know about you, but unlimited data plans, and on 4G, a lot of times I'm not even bothering to connect to my Wi-Fi anymore on my phone.
Yeah. Yeah.
So,
No,
once we have
absolutely.
5G, that'll be silly too, because 5G is actually might be even quicker than some of the Wi-Fi.
Right. Well, here's another interesting point is, if you go and replace your phone today, really the new phones have already incorporated 5G. So it's not even a demand pull on this technology. It's sort of a supply push.
Yeah.
So it's coming whether people like it or not. And what's interesting is if you sort of look at the current subscriber base across the world for 4G, we're probably at around 5 billion. Um, And if we sort of extrapolate that over the next 6 years, I've used some of the numbers that have come out from the Ericsson Mobility Report, where we're expected to hit about 3.5 billion subscribers for 5G by 2026.
Mhm.
That implies growth rates of close to 60% per annum.
Yeah.
And
That's these red bars down here, just so you guys can see on the screen. 2026 is the number that the
yeah,
red bar, excuse me.
right. And so what you'll obviously see over time is a decrease in everything that's below 5G and this replacement into 5G. Now, what's really interesting are the projections that are provided by by geography. If we sort of go to the next bar chart that's a little lower, you'll see that the blue bar chart is the predominant one, and that's essentially China. So you've got China that's way ahead of the curve on this. Then you've got basically Europe and the US. The US is the purple bar chart.
Yeah.
Now, while I agree with these numbers, my feeling is that Europe and the US will catch up to the Chinese growth rates far quicker than what's projected in these numbers, because the reality is all the new phones already incorporate that 5G technology,
Yeah.
and so there's no stopping it. And the next pie chart on the following page gives you that breakdown of growth rates. So
Mhm.
what you see is basically China accounts for 90% of that growth in the projections, but that will modify over time. And I'd give that probably about a year or two. So for us, how do we get exposure to all of this growth? Well, it's fairly simple. There's the 5G ETF that we've got in the portfolio. So the ticker is FIVG. And that is an ETF that gives you predominantly exposure to US incorporated companies, right? So you'll see on the bottom right that 77% of the ETF holds US equities. Now that said, given that the vast majority of the growth is actually first happening in China, one needs to look below that. It's not because the ETF holds US equities that you don't have exposure to the China growth on 5G. It's simply that they're incorporated in the US, and a lot of these companies have exposure to the Chinese market.
Yep.
In any event, what we've done is, in addition to the 5G ETF, we've added a more direct exposure to China's growth, which is not limited to 5G, but broader. And the ETF that we use there is the KWEB or KWEB, which most people are familiar with. And there's a considerable component within the ETF that's specifically linked to telecom in China. Now, that said, recently there is an ETF that's specifically been brought out to provide direct exposure to 5G in China, and we may add that as a subset to the KWEB exposure. So
It's
we may reduce.
VG, right?
Right, KFVG is a ticker. It's fairly new, and what I'm really doing is waiting for liquidity to build up
Right.
on that ETF, and also a slightly better entry point. So don't be surprised if we add that exposure in the next month or two.
Yeah, I mean, this thing really needs some more liquidity. But another point on this, just kind of taking a step back, and this is tremendous information that
Yeah.
we are giving here, but I think, one of the big things to understand, I'm just going back to the pie chart, or actually, let's even look at the growth here. It's really
Mhm.
interesting, and this, by the way, was also, it's like we're getting the second iteration of this, and that's the following. There are parts of Africa and Southeast Asia that are, either, just bunch of forest or a bunch of islands in the case of Southeast Asia, and they were very quick to adopt cell phones, like
Right. I mean, well, you can see it
because
in the
there was
growth,
no actual
right?
physical infrastructure.
Right. No, but
They
if
didn't
you
have
actually
phones.
if you look at those bar charts, you'll see that the green section, which is basically Southeast Asia,
Yes.
um, has numbers that are almost as large as the US and Europe.
Yes. Well, and that was my
So,
point, right? So it's like we're getting the second iteration of this now, right?
yeah,
Because these places, they don't have any landlines or anything, so for them it's an easy thing, an easy step to make, right? It's all
right.
satellite or whatever they have. So
Yeah. Yeah,
fascinating.
and it also has to do with, the the old guard of Western economies have
Yeah,
spent X billion building existing infrastructure.
sure.
They still want to amortize that and make some money off it before they replace it with something entirely new.
Yeah.
So
Understood. And quite
this,
frankly, also, if you think about from a user's perspective, I mean, a lot of people, maybe elderly people, they're just used to picking up the physical phone that's, hardwired or whatever, as
yeah,
opposed to these places never had phones before. They literally, the first phone they had was a cell phone 20 plus years ago, whatever it was, right? Um,
yeah.
so that's fascinating. Well, listen, I don't know if you have any parting thoughts on this, but I think 5G, we could probably all agree, is really center to a lot of the technologies we will be talking about and we have in our ETF Edge portfolio. Um, but you
Yeah,
know,
it's the way to think about it is it's just an acceleration of what we're already really addicted to. So, um, if you think that your kids are going to spend less time on their phones, probably not.
yeah, I mean, maybe we'll also get more productive in certain ways. Maybe certain things won't be necessary to do anymore. But I think maybe we can just end on this and just kind of focus again on the 59, let's call it 60% projected growth rate in 5G, and compare that to what are you going to get in the S&P 500 for the next 5 to 10 years. It's not 60%, right? Or
Right.
really Apple, and Apple's not going to go 60% a year. It's almost physically impossible and mathematically impossible. You always say they have to reinvent a new industry, which they could
Right.
at some point, but can it be that big? Hard to
And
imagine.
don't forget, most of these companies that cover this space are levered.
Yes.
So you have 60% top line growth and you add a bit of leverage on that.
Yeah. Yeah, a lot of debt financing, which quite frankly for, companies in their earlier stages, that's kind of something you would want to make. So, you know,
Yeah.
why not? Thank you, Mark. I really appreciate it, and I hope this is helpful for you guys. Leave us a comment or a thumbs up like, and we will see you in the next high growth segment video. Until then, be well.
All right, guys. Bye bye. Thanks.